This is Wealth Wednesday with Brent Wilsey, president of Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of the investment firm Wilsey Asset Management. Well, the big question is, are consumers running out of money? There's signs that we're starting to see that give us pause, that we're concerned that things are not going well with the war in Iran, starting to kind of play its toll. And we think it should be over another month or two, but consumers are starting to have some problems. And actually last week, we had the PCE, which is the Personal Consumption Expenditures Index, come out. And that's an inflation index that the Federal Reserve prefers to use for their inflation gauge. Well, it came out at 3.35% year over year, and that's the highest since November of 2023. And this is important because it's taking money out of people's pockets. And the reason this is so important for you, the investor, is that you got to realize if consumers aren't spending as much money as they did before, that means they're not buying as much because of inflation on their products. Therefore, company sales could go down, profits could go down, and that means that the stock price could fall because the companies are worth less because of lower profits. The other thing we're noticing too is that the personal savings rate fell to 2.6%, and that is below March, when it was 3.2%. And this is important because you want that savings rate high where people are savings and investing. And what's even worse is compared to last year, a year ago, it was up 5.8%. So personal savings rate at 2.6% is falling. And that's the worst rate since COVID years. June 2022 was 2.2%. Now trying to look at something normal from 2010 to 2020, the savings rate was about 5 to 7%. This is important for people because you want to be able to put money away for emergencies, for retirement, for savings, and everything there. So we don't like seeing this personal savings rate decline. It's not a good thing. The other thing we're noticing too is that 401ks, the loans on 401ks are increasing. The number of people taking loans on 401ks is increasing. It's now, last report, 19.2% of workers are taking loans against their 401ks. And I don't like these because, again, your 401k is designed to be for retirement when you retire. That's why I kind of like the old pension plans, because those you couldn't borrow against. I liked initially when the government came out with a 401k, I thought, what a great idea, because people can save for the retirement and do much better. However, the government then, as years went on, maybe for political reasons to get votes, they said, oh, we can make it so you're going to take from your 401k. Terrible idea. But again, the 401k loans are up from 18.8% last year, now 19.2%. That's almost 20%, almost 1/5 of people have a loan against their 401k. And I've talked about this before. People say, oh, it's the best thing because I can borrow against my 401k, pay myself back. No, your returns will not be as good as being invested. The other thing I noticed too that's not good is hardship withdrawals. They're now 6%, and that's up from 4.8% last year. And these are ones where you actually take the money out. You don't borrow, you take the money out. And this is terrible. And I know people say, oh, well, it's great because I got to buy my first home. There's reasons for it. I say that you're not going to realize how bad retirement's going to be for you down the road 15, 20 years, especially the younger you are. You really miss a compounding where your money can go up 2, 3, 4-fold on that money you took out. And I know the hardship withdrawals are for such things as, one that I do kind of like, if you're going to lose your home, maybe that makes sense, but medical expenses, tuition, these are ones I just don't think are worthwhile to really hurt your retirement plans. And again, you're using your 401k as an emergency fund. That's not what it's for. Thanks for watching. We'll be back next week. For more information, go to our website, smartinvesting2000.com. Again, smartinvesting2000.com.
This has been Wealth Wednesday, sponsored by Wilsey Asset Management.